Okay. Good morning, everyone. Thank you for coming to our webinar. I'm going to introduce you to our speakers today. I'm multitasking also, trying to get everybody in the room. Okay. Stephen Suissa. He's a founder and president of SHS Services. Steve has over 20 years of accounting, planning, and management services experience. In 2002, Steve founded SHS Services, which provides payroll, bookkeeping, and GovCon accounting services. SHS Payroll Division is fully bonded and insured, providing the technology and capabilities of the national providers with the service of a local company. The bookkeeping division provides bookkeeping service for profit and nonprofit entities using various software platforms, including QuickBooks. The GovCon division provides job costing bookkeeping services with a focus on DCAA compliance. Steve has an accounting degree from Ithaca College and an MBA from the University of Maryland, having worked in audit, tax, and private sector and C-level positions. As a principal of SHS Services, he brings a culmination of his experience to every client.
Internet connection is unstable.
Excuse me, can everybody please mute themselves?
Let's do that. What happened?
Hold on. I want to everybody mute themselves, and then we will, if you have any questions, you'll put them in the chat afterwards. Our next speaker is Aaron Boker. He's a partner in Aronson's Tax Services Group, a CPA, and is a proactive advocate for his clients, which include restaurants, hotels, food distributors, retail businesses, breweries, real estate owners, professional service providers, startup business owners, and high-level net worth individuals. In addition to his tax compliance and planning work, Aaron is committed to building the firm's hospitality industry practice and has a deep understanding of the unique business issues faced by companies in this market. With over 10 years of professional experience, his clients benefit from his dedication to excellent service and his commitment to his work. So topics we'll be covering today, the tax picture for PPP forgiveness, which loan forgiveness applications to file, general supporting documentation that should be enclosed with the forgiveness applications, the safe harbors that are available to business owners if there are reductions in the full-time employees during the covered period of the PPP loan. So I'm now going to turn it over to Aaron. And if you have any questions, please put them in the chat and we'll answer them at the end of the presentation. Okay, Aaron, over to you.
Great. Thank you, Margie, for that great introduction. And good morning, everybody. It's great to be back to be doing another webinar with the Rockville Chamber of Commerce. And I think this webinar is very timely. You know, as Margie mentioned, the topics that we're going to cover today is the tax piece of this PPP, which is very timely given that the IRS finally gave us long-awaited guidance. So we're going to explain what that means. Plus, also, it's going to be the end of the year, which means it's time to start thinking about 2020's taxes because it's going to be tax season before you know it. And also, myself and Steve, we're working with a lot of clients that are starting to go for the PPP loan forgiveness. So we're going to talk through what do you need to file and what documentation needs to come through. Because, you know, Steve and I will talk about the documentation really slips through the cracks a lot. So it's very important that we go through, you know, what really needs to be covered. So with that, I'm going to get right into it. And we're going to talk about the tax piece. So we got guidance a few weeks ago, right before Thanksgiving. And one of the things that we've been struggling with since the beginning of this PPP loan program, when it started back in April, is what are the tax ramifications of it? And what we mean by that is, what does the PPP loan forgiveness, you know, do for the tax returns? So let me walk you through, you know, what we were struggling with and what we learned from this guidance. So generally speaking, when you have a PPP loan or any type of loan in general, when it gets forgiven, it's usually cancellation of debt income and it's taxable income. But what the PPP program does is when the loan gets converted to forgiveness, the income is tax-free. But there were a lot of rumors floating around as far as, you know, well, what about the deductibility of the expenses that came out of that tax-free forgiveness? So with this PPP loan, you were able to use it to cover payroll, rent, utilities, and mortgage interest. Well, the IRS issued guidance, and they said, as we expected, it was not the news that we wanted, but we got the confirmation, that is, those expenses that get funded out of the PPP loan forgiveness are non-deductible. and non-deductible on 2020's taxes. So let me walk you through a brief example of how that's going to work. So let's say the SBA gave you a $100,000 loan. So what happens is on the books, you'll have a $100,000 loan payable on the books. $100,000 goes out. You'll show it on the financials as payroll, rent, utilities, wherever it ended up going. And that's correct. And by the way, from an accounting standpoint, it stays that way until the loan is forgiven, which is likely going to bleed into 2021. But when you go to do the tax return, and if you can reasonably estimate what your PPP loan forgiveness is going to be, and let's just say it's $100,000, when you do the taxes, you have $100,000 of payroll, rent, and all that stuff. That's going to get reversed. So if SHS Services is an example, they put together a lot of financials, for clients. If the financials show break even or modest profit, when you go to do your taxes, that loss or that modest profit might be more substantial than you think. And this is very important because it's really timely because we're starting to do year-end tax plan right now for a lot of clients. So we're trying to brace them for what could be coming, for fourth quarter estimates in January or tax liabilities in April. And what we've been doing up to this point is we've been doing a best case and a worst case scenario. And we're recommending clients, this is what the IRS confirmed. It's the worst case scenario as we expected. Yes, there's rumors flying around that Congress and Senate could step in and they could change that. But in all honesty, it's non-deductible until further notice. So you got to plan for this. You got to be prepared for it. The worst thing I could tell a client is, all right, let's be optimistic. Let's plan for it. And then that doesn't happen come April. So we're giving clients both scenarios. We're advising to go with the worst case scenario, but if they want to be optimistic about it, it's their choice. And I think it's very important that this time of year, you need to hear what you need to hear from your tax accountant. So that's how it works for traditional businesses, is that the rent, utilities, and all that stuff is going to be reversed on 2020's taxes. But a question that's come up recently is, what about those folks that are self-employed that don't have traditional payroll, rent, utilities? They're a sole proprietor, they're a 1099 contractor. They file a Schedule C. And it turns out, while we have not gotten specific guidance on this, but in talking internally with my partners at Aronson, we believe it's going to work the same way in that it's an add back to income. So, if you think about it, if you're a 1099 contractor or self-employed, when you got that PPP loan, the businesses that got it, it was really to cover payroll for their employees. But really, as a contractor, it's really used to fund what's called your owner's replacement compensation. So really what this did is this basically replaced profits, because that was the whole point of this program, was to cover wages, but also covered lost profits that would, fund an owner's salary, give or take. And if you think about it, if you don't add it back for the 1099 or the self-employed folks like you would with a traditional business owner, it's almost inconsistent. So the logic makes sense, but again, this drives home my point, is that if you're self-employed and you don't have the traditional payroll or rent, plan for the add back, when you're thinking about your tax bill for 2020. And so I think it's going to be very important to think about this stuff. And again, prepare for the worst at this point. We might get lucky, you never know, but be prepared, for the taxes to be a little higher than you think. So that was the first main item that we learned from this IRS guidance, and this was the big thing that we were waiting for. But the second thing that we learned, this was actually, a relief as a tax professional and for you as taxpayers and business owners, is that one of the things we were struggling with is we've had Rob Johnson from the SBA on here a couple of times, and he has told us several times that the process to take your PPP loan forgiveness application from start to finish is about a 5-month process, or could be a 5-month process. You give your application to the bank has 60 days to bless it. It goes to the SBA, they have another 90 days to bless it. So by the time you get from start to finish, you're likely going to go past March 15th or April 15th when the taxes are due. And there's no guarantee that you might have put in for a certain amount of forgiveness. You may not necessarily get it. So the question is, what do you do about the tax filings? What does that mean? What the IRS came out and said is that, again, if you can reasonably estimate what your loan forgiveness is, file your 2020 taxes as is. So again, my example, if you get $100,000 PPP loan, $100,000 of forgiveness, you take $100,000 of expenses off 2020's taxes. But then what happens? What if the SBA comes back and says, we're only going to give you $90,000, which means there's $10,000 of payroll deductions, as an example, that you might be entitled to. There's one of 3 ways you can approach that. One way is to extend the return, wait it out, which is what we were planning on doing initially before this guidance came out. The second option is you can amend the 2020 taxes after the fact, We honestly don't like doing that. It's not practical. It costs more money. And typically when you amend a tax return, you're under the microscope a lot more than you would with the traditional filing. But the third option, and this made us very happy to hear this, is that you can flush the additional expenses on 21's taxes. So what that means is, if that $100,000 of forgiveness becomes 90,000 and you're now entitled to another 10K of expenses, you can just flush that out and clean it up on next year's taxes. So I think that's going to make things very cleaner. For people that traditionally file on time, you can move forward as is. But the one caveat though is that if you're going to file your taxes in March or April, while you may have a lot of time to file the loan forgiveness, you've got to have a good feel or good understanding on where your forgiveness is going to stand. So you just can't just pull a number out of your hat and just run with that on the taxes. You really have got to kind of do like a test run or have the application figured out to really know where you stand. In all honesty. So again, that was a big sigh of relief. It's a big victory, I think, all in all, for a lot of our clients that have like 40K1s they issue to a lot of partners or shareholders, because those aren't realistic to extend or have to amend later. So I think, again, I think a big sigh of relief, and there's some flexibility on that. So that's really what we learned from the taxes. So overall, not good news on the taxability of the PPP loan, but good news on the tax filing ramifications. So now the next step is, so now we learned how the taxes are going to work. How do we go about applying for this loan forgiveness? So now I'm going to turn it over to Steve to tell us what our options are with the loan forgiveness applications.
No, great, Aaron. Thank you. And if I can ask you a question, actually, is the reverse of what you said. So if you got a $100,000 PPP, let's say, can you assume that only 75 will be forgiven? Take the 75 on 2020's return, and then the additional 25 once it's forgiven on 2021. Is that possible as well?
Yes, you can do that. But I think what we're going to find most likely, it's going to work the first option, not to discount that by any means. It could work that way. You could be overly conservative when you file March and April. But if you find out later that, hey, I did better than I thought I would, in all honesty, the SBA is not going to add to your loan forgiveness. They're only going to take it away. So if you're going to apply for this thing, be assertive, and assume the best case, which you think you're entitled to. But if you put 75,000 on the return and then you do the application later and you think you're going to get 100, you can add back $25,000 of expenses on 21's return.
Got it. Okay. Well, as you said, that really brings into play here the forgiveness. And I guess before we just go or touch base on the forms themselves, one of the comments I'd like to make is in our experience over the last 2 months in really doing the PPP forgiveness applications, we have found that working with local lenders have really been a huge help compared to working with some of the national large banks. We've been able to actually call the brokers and call the bankers, even though they all have the online portals. The bankers and the contacts have been able to really provide some guidance on the forms that are needed. When you think about the PPP forgiveness application, right, the simplest form, the simplest process really is a business with employees that did not have any reduction whatsoever, because the forms are pretty straightforward. You fill out the application for forgiveness, you provide the payroll returns, you provide the tax returns, the quarterly returns, and the calculation is on the form and you're done. So you meet the FTE requirement, you meet the no reduction more than 25% of the employee's hours or salary. It's quite simple. Where it gets complicated, and even more complicated, is when you are an individual, Schedule C, right? Or you have had to actually reduce staff because of either PPP ran out, right? Or the PPP funds weren't enough, or folks didn't actually even come back to work because they were making more on unemployment than they were making with you. So all this created a whole bunch of what if scenarios and challenges for everybody. So, my first recommendation is contact your local lender and make sure that you are in contact with them. They review your form before submission. You talk to them about what you're doing so that you have the best shot and the best chance of not getting your application rejected. That's number one. So to discuss the forms part of this thing, the SBA essentially came out with 3 forms. And the first form that actually came out way back and hasn't been updated since really June, middle of June, is the Form 3508, and we call that the full form, right? They came out with a second form at the same time called the Form 3508EZ. And what's the difference between the two? So the EZ form basically is used if you are self-employed and have no employees, or you have employees and did not reduce your salaries or wages more than 25%, and if you did not reduce the employees' hours by more than 25%. So what is really the difference between the full form and the EZ form? For all practicality, honestly, not much. You still have to go through the same FTE calculations. You've still got to provide the same documentation for payroll register, the 941s, do the calculation on the FTEs, etc. The newest form actually that came out was the 3508S. This was actually posted in October, and this is for loans of $50,000 or less. So when this came out, the original thought was easy form, one pager, sign, and you got less than $50,000. It's basically an automatic forgiveness. What we have found is that it's not that clear cut and not that simple. You still need to provide all the documentation necessary if you have payroll, and if you don't, you have a challenge of Schedule C and owner compensation. So what we've been running into, for example, is what if you are a business owner with a partner that's getting guaranteed payments? Well, that doesn't fall really under the normal process for the application for forgiveness. So again, talking to your banker before you submit it and making sure that you have the right form is really important. Talking to your CPA, right, or your bookkeeper if they're knowledgeable on how to calculate FTE and how to calculate the amounts that are forgiven is extremely important. We, as I said, having a payroll company, myself, we've created the FTE reports. We've created for our clients that use our payroll service, we've calculated, the payroll registers with the limitations in there as well, so special reports. But one of the things that we have found across the board, having a bookkeeping division, one of the things that we found across the board is that our clients that are using other companies, we've had to actually look at those reports in detail and make sure they're actually accurate. And a lot of times we're finding that they're not. We've had to do a manual calculation on the FTEs to make sure that we're maximizing the loan forgiveness. So that's extremely important, is to look at your reports that come out of the payroll systems and not assume that they're automatically correct. So first part of the process, right, is to calculate your FTE numbers. The second part of it is to calculate, right, what amount you can apply for forgiveness. And that's a combination. So in terms of the Form 3508, 3508EZ, and the 3508S, so the first forms, two forms there, have not been updated since June, right? They have been rolling out expiration dates and changing the expiration dates of these reports. If you look at them, they're actually changing. There is legislation proposals to reduce this paperwork for loans that are under $150,000 right now, but that's been basically the last 3 months. It's been sitting in the government, library, so to speak, waiting for something to pass. So the IRS actually came out, the SBA, actually came out and self-proclaimed this 3508S form for $50,000 or less. We were hoping that this would be for $150,000 or less. But again, what we're finding is that these forms still have the basic requirements for submission, right? In terms of lender timing and the SBA timing, the SBA actually opened up their portal in August to allow for the forgiveness application to be accepted. But many of the banks weren't even ready to take on these applications because they had to design their own portal and their own forgiveness submission process. So you really do need to check with your bank. And a lot of banks right now are actually sending emails to their clients in tiers. They're doing X number of applications for forgiveness at a time. So if a bank issued, and local banks, so if they issued, let's say, 3,000 PPP loans, they're chunking the forgiveness into 500 clients at a time. If not, it would be completely overwhelming for a bank to process 3,000 forgiveness applications at once, because there are deadlines. So what are those deadlines? When you submit your loan forgiveness application to the bank has 60 days to review that and then provide that loan to the SBA. That is actually mandated as part of the PPP program. The SBA then has 90 days to review that loan and determine whether there will be full forgiveness or partial forgiveness or request for more information. But in total, if you look at a 60-day time frame for the bank and a 90-day time frame for the SBA, you're way past the deadline for filing taxes. So this is where, Aaron was discussing potential extension right on a tax return, and seeing what happens with the forgiveness there. With respect to the limit of $50,000 or the limit of $150,000, I guess the one thing that we're seeing from all the experts, including the banks, is that really time is on your side here. The deadline for applying is not the end of the year. The deadline for applying for forgiveness is actually 10 months after the end of your covered period. We've had many seminars on 8-week covered period versus 24-week covered period, so I'm not going to cover that now. But it's really, you have 10 months from the last day of your covered period to file. So there actually are a lot of folks that are waiting to apply for forgiveness until there is more guidance, potentially with the new administration, on this $150,000 or $250,000 or less of potential automatic forgiveness.
Right.
That's
Steve,
kind of
let me
the
ask
hope
you,
out there.
Steve, sorry to cut you off. I want to ask you a question just from a practicality standpoint as professional. Let's say, you finish the 8 weeks, the 24 weeks, you believe you're going to get 100% loan forgiveness. From a practicality standpoint, when do you file for the forgiveness? What would you do?
We're telling folks, do it as soon as possible, because we don't know what's going to happen. So waiting and hoping that Congress gets their act together and automatically forgives any number, and then is going to challenge the IRS on their ruling. We're not advising that. Get your loan in when the bank gives you the authorization to do that. So you make sure that you have all your paperwork in, and gets it into the SBA without any hiccup. We have actually seen that some of the forgiveness applications have come back with requests for more information. So this is a learning process with the banks and with the CPAs and with the bookkeepers in terms of what they're submitting. So everybody is kind of learning this process as we're going along. So we don't suggest waiting to the last minute to do this.
Nope, that's the consistent message we have as well. I think that's great advice.
Mm-hmm. And then really what we did discuss, what are the documents that you need for loan forgiveness. So besides the application, you're really talking about your federal payroll tax filings, your 941s, your payroll registers, your FTE calculation. You're going to need payroll registers as well from either January 2020 through February 2020, or going back to the previous year, right, which is February 15th to June 30th of 2019, to be able to compare your FTE calculations. The bank is going to ask for all of that. Receipts for employer contributions to group benefit plans, receipts for any retirement plan contributions. If you used part of your funds for rent, right, they're going to ask for your lease or proof that you didn't accelerate those rent payments, right, to be able to get the deduction. So there are a lot of reports that are going to have to go with this, including your quarterly unemployment, right, state unemployment return. So there's a lot of documentation that you're going to have to show to prove that you use these funds. What's the challenge? If you don't have employees and you're on Schedule C or you have guaranteed payments, The challenge is, how do you prove this? Because I know that Aaron can confirm, one of the challenges that we have on the form and the application is that if you have employees, right? I'm not talking about a Schedule C. I'm not talking about guaranteed payments. If you have employees, these forms exclude owner compensation from the forgiveness, which means where most owners thought they were going to be able to pay themselves as well, that money that you took as an owner is not forgivable by the SBA. So that has actually shifted, and the last comment I'll say is that's actually shifted a lot of the folks that we're helping from an 8-week period to a 24-week period just to be able to get the full forgiveness. So be really mindful and careful about your 8 weeks and what's allowed and what's not, and if you have to go to a 24-week period. So those are the forms, and those are the complications that we see with it. And we're here to help if anybody needs or has any questions.
Right. You know, Steve, I'm glad you brought up the stuff about the documentation, because I could tell you from the applications I've prepared and or reviewed up to this point, where I'm seeing a lot of clients get tripped up on is the documentation. I mean, the numbers, they are what they are. It's all going to work out if you play by the rules, when it's all said and done. But I struggle with clients to get the documentation, because one of the big things the SBA is looking for is, hey, we gave you this loan of X. Proved us where X went. Where did it go? What the buckets? And so I see all these payroll summaries, and I get the rent checks and all that stuff, and it doesn't add up to the penny. And it's very important. The burden of proof is on you as the loan applicant to make sure that you did everything right. And that's why we are both very sticklers about this. Do this thing right. Have somebody look over the documentation, because that 90-day process, that 5-month process from start to finish, if you trip up somewhere, if something's missing, it could take longer. The bank looks at it, there's something missing, they're going to kick it back. And same thing with the SBA. So it is really critical. Do the due diligence. Pay Steve or us or any accountant just to look over the stuff and do it right the first time. It's worth the investment.
Aaron, can you share a little bit of insight from a tax perspective on the interest? I know that interest is still accumulating on this. And how is that going to play out in terms of taxes? And what if it's forgiven and you've paid some interest? How's that going to work out?
Right. So what happens is the interest starts accruing from the day that you get the PPP loan. And if the PPP loan gets forgiven, the interest gets thrown out. So it kind of goes back to what I said earlier. If you reasonably believe that you're going to get this loan forgiven, and it depends upon if you're an accrual basis taxpayer or a cash basis taxpayer, you know, if you're accrual basis, you wouldn't accrue it. Cash basis, you deduct it when you pay it. But what may happen, what we're hearing is that generally speaking, you don't start paying the interest until you start putting in the application, and then you can reasonably estimate, you know, what you think you're going to have to pay back. And then you start paying in the interest. So it's not going to start for a while, all in all, but as far as taxes go, if you think you're going to owe it, and if you start paying it, that's when the deductibility comes in. But in all honesty, we should not see any interest on this for 2020, you know, all in all. If there is, probably very little, I would imagine. That's a great question that you raised. Right. All right. So I want to talk about the FTE safe harbors for a little bit. And I think this is a very important thing. And I think what I'm finding is that this is going to be a big reprieve or get out of jail for a lot of our clients. Really, the purpose with the PPP is really two things. You know, if you're going to get 100% loan forgiveness, you got to prove that A, all the money got spent, you did the right ratios, 60% on payroll, 40% on the other items like rent, utilities. And number two, you didn't reduce your workforce, you didn't cut payroll significantly. And what I mean by workforce, you know, we've mentioned this in some other webinars. You got to look at what your FTEs were, your full-time equivalents. You know, there's a couple of reference periods you can use. You can use February to June of 2019 or January through February of 2020. And whatever that reference period is, over the average 8 weeks or the 24 weeks, your FTEs has to be of equal or greater value. So, and that makes sense because that was the whole point of this, was to keep people employed. But what we're finding, especially with a lot of the hospitality folks that Margie mentioned that I work with, is, you know, the sales aren't there. The revenue's not there. It's not realistic or practical to pay people to be on payroll just to be on payroll when there's no work to be there. So, and what this does is we run into a couple issues. One, clients have a hard time spending all the money within 8 weeks or 24 weeks. You know, a lot of times there's some carryover into 24 weeks to make it happen. But the problem sometimes is the money may run out in week 10, week 11, and then you got to lay everybody off. And then that skews your FTE, average for the rest of the way. So, and then we have a lot of problems with the FTs, whether you go the 8-week route or the 24-week route. So the question is, how do you get around this? And it turns out there's 2 safe harbors that you can do to make this thing happen, to not get dinged on the FTE reduction. The first safe harbor is if you were not able to operate the same level of business that you were previously, historically, between February 15th and the end of the cover period. And this is because of compliance or guidelines that was issued by the Secretary of Health or Human Services. And while that's a federal mandate, but what we find a lot of time is a lot of the state and local governments are following what the federal guidelines are. So to give you an example, I'll use a restaurant as an example. Restaurant, granted, they're hurting, obviously, because people are not going out, they're eating or whatnot. But even if things were back up and running, like a bar, you can't cram 200 people in a bar like you were prior to COVID. You can't, there's limits on the amount of people that you can put into your restaurant or bar. Even if you can put people in, you got to space out the tables at least, 6 feet from one another. So you can't do the same volume. It's just not practical. And so that's a great example where a restaurant or hospitality or somebody like that, if they can't do the same volume business because they can't bring the same, customers in because of guidelines, of course they're not going to have the same volume of payroll. Again, back to my point, you're not going to hire people just to hire people if the work's not there. It's just not realistic from a business perspective. So again,
it's also
yes.
important, right, Aaron, to note that that's restaurants, for example, are a great example of what you brought
Right.
up. If you have a business where you're working remote or your employees are working remote, or you actually have folks coming into the office, even if it's in shifts, you don't qualify for that. You can't claim that the government or the county shut you down, because you still are operating. So it's a real fine line. You've got to be careful about what provisions you use in the forgiveness application.
Right. It's really, it's not a black and white. It's really a facts and circumstances thing. And while we've looked at the instructions for these loan forgiveness applications, while this is not mandatory documentation if you're going to use this safe harbor, but you've got to have support ready if the bank or SBA comes back and says, hey, prove to us that you're using the safe harbor, prove to us that these health restrictions are hurting your business. So you really got to think it through. And I'll give you another example that's outside restaurants. Steve and I have a mutual client that does a cleaning service. So they go into these office buildings and they clean up the places at the end of the night. And they're a prime example because a lot of these office buildings, they were closed. And they were closed while they were still working remotely, but because the health, people came in and said, hey, you got to close your non-essential business. Well, our client, the cleaning service company, they can't come in and clean the place at the end of the night. So they're a great example. You can make that argument. So that's one example. The second example, and this is another great example of safe harbor reprieve, is let's say if you can prove that you reduced your FTEs between February 15th and April 26th, which was the height of when the pandemic was going on, and if you didn't get your FTEs back to status quo over the average 8 weeks or 24 weeks, if you bring everybody back in some shape or capacity between now and the end of the year, you will not get docked for any FTE reduction. So to give you an example, let's say whatever reference period you decide to use 20 FTEs as your baseline. And if your average FTEs was 12 or 15 as an example, if you have 20 full-time people on payroll at some given point between now and the end of the year, they will give you a reprieve for that. Because again, that's the intent, is we want you to bring everybody back to work. And that's another one where you don't necessarily have to give the documentation to the bank or the SBA, but have it ready to go if one of them come back and ask for it. So you just got to be careful. You got to have, it's just like no different than when you do a tax return. Yes, you can put the tax return in, doesn't mean you need to give every work paper with the tax return, but you got to have the evidence and support ready if you get audited or questioned. So it's the same methodology. So I think that FD Safe Harbor is going to save a lot of people, in my opinion. But again, think it through, see if it makes sense. I recommend, talk it through with an advisor, talk it through with the banks. I've talked with some lenders, on certain client explanations, because not everybody is straightforward, like a restaurant as an example, but it's a lot to think about. You really got to think this thing through effectively. And with that, I think that's all that Steve and I have. So I guess we'll turn it back to Margie for questions.
Thank you so much. If I could have you guys look in the chat and see what one of you wants to address. The first one is from Jamie. Could you please address guaranteed payments a little more and how that is impacted by the PPP? Steve
Steve,
or Aaron?
Yeah, Steve, you want to take that one? I can chime in if needed.
Yep. So on the application, we've actually used the 3508S application because some of the folks that we've seen that have gotten guaranteed payments have been under the $50,000. So part of that form talks about owner compensation, basically Schedule C, because there is no payroll register. There is no 941 or unemployment return that you file with that. So there is a section on the form where we actually have to list no employees, right? But it's owner compensation. And the bank is actually reviewing that owner compensation and determining the forgiveness part of that. So as long as they've met in fact, they were one of our clients that had that. We had to go to a 24-week period because they didn't qualify for the 8-week period under the $50,000. So that actually 24-week period allowed us to use the $20,000+ number as forgiveness instead of the $15,000 number. That allowed us to use the full $41,000 that they got in their PPP loan. So just check your application under the 3508S and make sure you're completing it where you don't have employees, that it's owner compensation.
Thank you. John is asking, if you are under $50,000, do you believe that the approval from the bank and SBA will be faster?
I'll answer that one. I think the answer is yes, and that's the whole point, as Steve mentioned, of the 3508S, is that if you're under $50,000 and you played by the rules, this is to streamline the process. But I will caveat my answer and say, you still got to have the documentation to go with it. So if you do everything right, you have all the documentation, it'll work. But if something's missing, it's going to slow down, just like anything else.
Just keep in mind as well that they still have 5 months in total to respond. So just because we're calling it sort of this easier automatic forgiveness, they're still going to review the documentation you provide. Maybe it'll be a quick, glance at it, make sure that it's there, or they'll rely on the bank to certify that they've reviewed it. But the bank won't certify something if they don't think that the SBA will approve it, even if it's under $50,000. They're not going to risk that.
Okay. Next question. Please confirm, assuming you meet all the requirements for the loan, payroll, rent, etc., you pick up all the expenses as normal and then add back the PPP loan. In effect, you have income that is taxable for the PPP.
That is correct, in essence. Think of it this way. They kind of, in my opinion, they did this kind of backwards, because typically when you have a loan that's forgiven, the loan becomes taxable income and you keep the expenses. But they did the other way, where the loan, when it gets converted to income, is tax-free income, but they're taking the deductions off the tax return. So either way you present it or discuss it, you're going to end up in the same position. You're going to have taxable income. And that's why I caution everybody, if you get financials from SHS and it's, break even, modest profit, modest losses, that might be a little higher come tax time. So just be careful with that. And
from a bookkeeping perspective, I think it's really important to note that your bookkeeper has to make sure that your profit and loss statement, right, your wages ties out to the W-3. Let's not, don't let the bookkeepers assume or modify or change those expenses. That is a tax return item. So produce the financial statements, right, as you normally would, and provide a schedule of what the PPP funds were used for to your CPA. They'll make the determination of how to put that into the tax return.
Right. And to piggyback what Steve said, it's very important. Do the profit and loss, do the financials like you normally would, because while the tax stuff, on my end is separate, you don't want to compromise anything later. Let's say if you applied for a loan after the fact and they want to see, what did you really do last year? Because that's the real story. You lost money or you're break even. Just because the tax return shows $100,000 as an example of an income, that's not what really happened with your business. Mm-hmm. And then that loan, when it gets converted to, forgiveness income in 21, the bookkeepers will take that loan and convert it to income. So that's a 2021 item. And I think it's very important that it's a loan on the books until the SBA says all is forgiven.
Mm-hmm.
Thank you. Can you address about owner compensation is not forgivable for an LLC? Does this mean that pay to members is not forgivable?
Steve, you want to tackle that one first?
So if you actually look at the form 3508 and 3508EZ, it does actually remove the owner's W-2 compensation from the ability to use the PPP funds. So I don't know if I said that correctly, but essentially correct. If you're an owner and you're on W-2 under LLC, you are not allowed to use PPP funds for your wages. You are excluded.
Right.
If you are a Schedule C, right, and that flows up, that is kind of one of those things where I've seen folks do it both ways. And Aaron, you can probably chime in here, but we've seen where it hasn't been allowed, and then we've seen folks that have tried to apply separately using the Schedule C for that. That's a game that we don't play as bookkeepers. If it's excluded, it's excluded, and that's the unfortunate part of this whole thing. It was meant to help your employees keep their jobs, not to compensate you as the business owner.
I agree with that point. This whole thing, I think that's what's been lost a lot of times in all this. This was intended for payroll. It was to keep people employed. It's all about the payroll. If you're self-employed and you don't have any people on payroll, that's a separate application. And actually, I didn't mention this in my part of the presentation, but I think it's very important. I want to talk about the Schedule C folks for about 30 seconds. When a Schedule C filer or someone that's self-employed applies for the forgiveness, the question is it automatic forgiveness? And the answer is not necessarily, because what's going to happen is that 2019 Schedule C, we're telling folks to go with the 24-week period, generally speaking. It's going to be 2.5 months of Schedule C, 2019 Schedule C, that is going to drive the forgiveness. And while people, when they applied back in April and May, the Schedule C was pretty much done at that point, but there were a lot of folks where they had a draft of the Schedule C, but then they filed later and there was some change to the numbers, because maybe that Schedule C at 50,000, but when you did the tax return, it maybe got down to 40. So in essence, if you got funded on $50,000 of draft Schedule C income, prorated for about 10 weeks, and now your income dropped to 40,000, even lower, that could be a strike against you on the loan forgiveness. But there is a workaround, and I did this for a client this morning. If your Schedule C income dropped, and if you take 2019 Schedule C and you prorate it for 2.5 months and you're still short in the forgiveness, a lot of these self-employed folks, you still got to pay rent, you still got to pay utilities, you may not necessarily have the wages. You can count that rent towards the forgiveness, but you still have the same rules as a business owner, where you got 60-40, you can't spend more than 40% of the forgiveness on rent, utilities, the other buckets. So that's just something you got to pay very close attention to. It's not automatic forgiveness if you're self-employed. It's really, what really happened. And that goes back to Steve's documentation as far as, what are they going to want to see for the self-employed individuals or the Schedule C filers? They're going to want a copy of the Schedule C. They're going to want a copy of the 2019 tax return that lists that sole proprietor, that independent contractor income, because that's what's going to drive it.
Okay, thank you. I'm going back up into the chat now. I think you might have answered this, but I heard you just saying that owners paying themselves will not be allowed. When we got the loan, we made sure to follow the instructions that we did not pay the owner more than what we paid her last year per pay period. Are you saying that all the money we paid her this year will not be forgiven? We are an S Corp.
I'll comment on that with S Corp. And first off, Steve mentioned as W-2, you can't be, W-2 wages don't count for LLC owners. Not to be a tax stickler, but as an LLC owner, you should not be taking a W-2 salary, just to point that out. But the rule of thumb, we did see that there is something with the S Corp folks, where if you took a salary last year of $100,000, and whether you go with 8 weeks or 24 weeks, you do have the ability to prorate that down to $15,500 for 8 weeks. There's a $20,000, I think $800 ceiling for 24 weeks. So you can do that. But what they don't want you doing is that if you as an owner, you didn't take a salary or have any compensation in 19, they don't want you giving yourself a raise in 2020 to make the PPP loan forgiveness happen. So it's got to be status quo from last year. So that piece is okay. That is an exclusion.
Correct. That is allowed. You're an S Corp.
Okay, next, we received funding from both Maryland State Department of Education and Maryland Department of Developmental Disabilities. Will we be able to use the payroll that funds from these two sources covered for forgiveness? Can you discuss thoughts on new questionnaires for PPP loans over 2 million?
I'll answer the $2 million part. In all honesty, I've only had one or two clients where the $2 million threshold has come into play, but really the general gist of the questionnaire is that, if you have over $2 million, whether it's for one business or a group of businesses, because one thing we mentioned a long time ago in one of these webinars is that if you have commonly controlled businesses, you got to aggregate them all together. And if you're above $2 million, these PPP loan forgiveness applications are being audited. They're under the microscope a lot more than a traditional application. And one thing they added is a questionnaire, and really what they're trying to test is, did you really need this PPP loan? So that's really the gist. And I would argue some businesses it's straightforward. There's a lot of other businesses that made out very well with COVID, have been fine. But I would argue, and that's what they're looking for is back in March or April, why did you apply for this thing? And you could say the position that, well, we didn't know what the future was going to hold. There was a lot of uncertainty. Professional services is a great example. The legal, the accounting world, they've done okay for the most part, but we didn't know what was going to happen in April. It was kind of scary. We didn't know what the future held. So that's really what they're going after with that questionnaire. It can be a little overwhelming, it can be a little daunting, but it's just kind of the sniff test that the SBA is doing effectively.
Okay,
And
next question. What percentage of the company does an owner need to own before their compensation is considered owner compensation? Do they need to be a principal 20% or just over 2%?
I'll comment on this, and Steve, you can chime in, but I don't think it makes a difference. I think if you're a direct owner, you're an owner, bottom line. I mean, I've not seen a 2% threshold out there. So if you're an owner, you got to look at last year, and that's really what's going to drive what you're able to take or not take.
Agreed.
Next question. So to confirm that if the SBA says the PPP loan is forgiven in 2021, it is income in 2021, not in 2020, even if the forgiven letter comes in 2021?
Yeah, I'm going to give you the tax and the accountant answer. The accountant answer, it gets converted to income in 21. So on the books, it's a loan until forgiven, which will be 21 most likely for everybody. For tax purposes, it's income in 2020. So what the IRS said is that when you go to file your taxes, if you can reasonably estimate what your loan forgiveness is, the income, quote unquote, or the expense reduction, that goes on 2020's return. And then you can clean it up in 21 if something else changes.
Okay, next question. In determining the FTE, we use ADP, who have provided reports, and like you said, we are doing our own calculations. We are a home care agency, which is essentially a staffing agency. Although our hours were cut substantially, we're able to staff our shifts. We did have caregivers who refused to go back to work because of COVID. What sort of documentation do we need to prove for the safe harbor that they refuse versus employer not staffing them? If we are able to decrease our required FTE by those that refused, we should be able to make our FTE requirement. We have emails, and we also have their statement given to state unemployment. What else do we need? We are an S Corp.
Boy, that's a loaded question. So let me at least tackle the first part, which is the FTE, and then Aaron, of course, step in for the safe harbor. But in terms of the FTE, there are two ways to calculate FTE, right? So the first way is by anybody who works 40 hours, right, or more is equal to 1. Anybody who works less than 40 hours, no matter what that number is, right, is a ratio, right, of 40. The second way to calculate, which we've seen more successful for our clients, is that if you are 40 hours or more, you're equal to 1. If you are 40 hours or less in any capacity, you can use a 0.5, right, as a ratio. So we have found that if you calculate either 0.5 or 1, as opposed to the percentage of 1, we found that that has allowed more folks to meet the threshold, the FTE calculation, than using the percentage. So work it both ways. The reports that are coming out of some of these other companies are actually a 0.7, 0.6, 0.9. So what we're telling our clients, right, and what we're doing for our clients is we're using a 0.5 or a 1, and that's it. And that's allowing us to actually meet the FTE a lot more closely than the way that some of these other payroll companies are calculating it.
Yep, I agree with Steve's statement. I mean, run it both ways. One way might be better, the other way might be the other way. Just see how it is. But I cannot emphasize, if you're using, I recommend you, Steve, for this, but if you're using somebody else, look at these reports and see if they make sense. I've seen some of this stuff from some of these other payroll companies, and they just don't make sense on the surface. I'll give you an example. I have this one restaurant I've been working with, and this guy's been very meticulous, working through the FT numbers to make sure he was on par with where he was at the beginning of the year. And then we got the report from the payroll company, not even close whatsoever. So look at the reports, work through the numbers. Don't just rip it out of the printer and just run with it for the forgiveness piece.
Well, that is all the questions we have in the chat. Does anyone else have anything? Otherwise, we will close early. One other, what about safe harbor part for my question, documentation? We're going back to the last question from Connie in the chat.
I would say to that, I think emails is good documentation. Just have documentation that they left the company. We've seen some examples where people were temporarily laid off, then the PPP money come in, you try to bring them back and they say, no, thank you, I'm good. I'll stick with the unemployment compensation that I'm making. And we've seen this happen with a bunch of clients. So just have some type of emails or documentation to show, or even an offer letter, just something to show, hey, you did your part to try and bring them back to work. And they said, no, thank you. They declined it. So I'm not sure necessarily the bank is going to want it, but have it ready to go just in case it's asked.
And it wouldn't hurt. I mean, the bank may not want it, but if your file is complete and you're working with the banker directly, showing them what you have, I think that's going to go a long way towards that banker going to the department within the bank that is going to be reviewing these forgiveness applications and pushing that you have all the documentation that it should be submitted to SBA. So it's worth getting together with your banker and showing them what you have and making your file as complete as possible.
One other thing, if we send an offer letter by email and we got 0 response, does that count as a refusal?
Yeah, it's a gray area. I mean, I could see the position, but the problem is the burden of proof is on you to say they declined it. And yes, you could say, well, they didn't respond, no, thank you. But if the SBA is really rigid, they could say, well, prove us they declined it. We're going to assume that, they took you up on it. So it's, I know it's not a good answer, but I would say, try and get something. If you don't, there could be some subjective risk that they might disallow it.
And one other question just popped in. My wife is in my company's payroll. She is not owner in the corporation. Will her payment be considered owner?
No, that's deductible.
Yeah, that's right. That's correct.
That's part of, yeah, it's an employee. She's an employee of the company.
Right. I am going to caveat, the spouse is okay, but just be careful with the owners, because I see a lot of situations where you have an LLC, some of the owners are other LLCs that feed into the owner, and then you got the owner that's taking a salary directly from the company. So that's kind of a workaround. Just be careful. And I've warned clients about that. If you're going to do that, if someone were to really sit down and put the trail together, they could direct it back to you and say, all right, you really are an owner pulling a salary when you didn't take anything last year. So just be careful with the way you structure these things.
Okay, well, thank you very much, Steve. Aaron, you are my go-to guys. Thank you for bringing this timely information to our business community. Oh, someone has one last question.
Yep,
Hurry up, Christy, hurry up.
No, thank you, Margie, for having me. It's, I enjoy doing these, and this is a nice value add that we can bring to everybody. We're not done with this. I'm sure there's going to be more. So please reach out to myself or Steve if anything comes up.
Absolutely, and it's really important for us to all understand as well that supporting local is extremely important. I mean, supporting the chamber, supporting our local businesses. That's really what's going to get us through all of this at the end of the day.
The last question was, for an S Corp, is W-2 income for the owner deductible?
Deductible for PPP or for tax purposes? PPP.
PPP.
Yes, if you took a salary last year and you didn't give yourself a raise. So a good example, $100,000. If you go with the 8 weeks, you can give yourself a max of about 15.5 grand. So as long as it doesn't exceed 15,500, that's okay. Now, if it's the other way where you paid yourself 50 last year, that gets prorated to about 7,000 and change. So you can deduct up to $7,000 on the PPP. No comp last year, no owner's comp on the PPP. Last year drives
Yep.
what you're able to do.
Absolutely.
This has been wonderful.
Good questions, everybody.
One more.
Oh, Connie's got one.
I have been trying to run my loss for 2020 equal to my PPP loan. Is this a good idea?
Well, if you think about it, one of the things we preach with clients and we try and explain, what happened for tax purposes is where did the cash go? What happened? So in essence, if you have a loss and the question is what funded the loss and if it's a PPP, it would make sense. Yeah, there's things you can manipulate. I'm not trying to encourage that. But in essence, if you kind of take a step back as far as what happened in 2020, if the loss equals to your PPP loan, then you should be about break even when it's all said and done on the taxes.
Well, and think about what the purpose of PPP was, right? It was
Right.
assuming that if you lost business, right, you would have reduced your staff. And so what this was doing was giving you the income to keep that staff on par. So if you did not have that amount of income, you would have had that loss, right?
That's correct.
So in essence, that was the purpose of. So, if you're able to, I don't want to use the word calculate, but if you're able to calculate where that's what ends up with your financial statements, then basically the PPP loan did what it was supposed to do and what it was intended for.
Okay, on that note, thank you so much. I appreciate it. We will keep you informed as things progress. Steve at SHS Services, he's our go-to guy. He's the Chamber's customer. And Aaron, I want to thank you so much for being a great partner with the Chamber and bringing all these webinars and getting all of our questions answered. Just quickly, our next event is on December 15th. It is our annual membership meeting. I encourage you to come on. We are going to be voting for 6 new board members and 4 returning board members. And we're also going to launch our brand new website. So I hope to see you on the 15th. Again, thank you. Thank you so much.
Great.